Tariffs are manipulating the stock market. Hey everyone, it's Wolfgang. So we're calling today Whipsaw Wednesday. 2 days ago, we posted a video. The title was The Horror Financial Markets Today. And we said, avoid stocks until all tariff issues are resolved because of the volatility. And it seemed clear over the past 5 days that the volatility was going to be here for a while. So that seemed like good advice, and it actually was good advice, depending on how you were invested in the market. The Dow rose 2,960 points today. That's the most in history. The Dow has a very long history. Today was a historic day, immense historic day. The NASDAQ index rose 12% today, 1,857 points. Quite a range for the stock market today. Today is no evidence of stability. Just absolutely zero evidence that there's any stability in stocks. Zero evidence there's any reason to invest in stocks, to put new money into stocks right now. There's just no reason to do it. So with a couple of exceptions, I'll explain. A couple of corrupt exceptions I'll explain as we go through this. Putting new money in stocks right now is more like gambling than any time in recent history. If you think about the 2008-2009 crash, that was volatile and it was a big drop in the market, but it wasn't like we've seen in the past several days. We've had like 5 days or more of very volatile stock market, and it's very unusual. So here's a poignant question. Why is the stock market being manipulated? Because we think it is. We think the market is being manipulated with the tariffs issue as the underlying excuse, or the cover story is a better way to describe it. We think the tariffs are being used to manipulate the stock market by insiders, because it is statistically highly unlikely for such extreme ups and downs for so many days in a row in a very concentrated period of time. It's just not that common. And if you think about the tariff announcements, that's the key thing that makes it very suspicious. The tariff announcements and the ups and downs in the market. So, we don't have any concrete proof, but we have a suspicion it's being manipulated by the following two corrupt players. People in Congress, they're allowed to trade on insider information. There have been steps taken to remove that privilege, but I believe it's still legal for people in Congress to trade in the stock market with insider information. For the rest of it, it's highly illegal and it can get you thrown in prison. Wall Street insiders are the other corrupt player in this manipulation. We think people in Congress and people on Wall Street are using the tariffs to manipulate the market. They're using advanced knowledge of tariff announcements to benefit in the stock market. And we sort of wonder if some of the tariff announcements are part of the manipulation. In other words, the announcements are not passive things that just happen and, let's trade on those. The tariff announcements are part of the scheme. The tariff announcements are actually purposeful, designed to set the market up for conditions so that it can be traded on. So, and I'm not pointing fingers at anybody, but I will call out people in Congress because they're legally allowed to trade on insider information, and people on Wall Street trade on insider information all the time, even though it's illegal and it will end their career if they get nailed for it. So those are the two corrupt influences that may be making bank off of this, what's been going on. So today, as an example, let's just consider today. There was mass buying. I mean, if you think about the most historic increase in the Dow in history happened today, it happened because there was mass buying of stocks. Just immense buying of stocks. And it was partly a short squeeze. So let me explain what short selling is. You need a margin account at a brokerage. If you don't know what a margin account is, you can look that up. It's basically the right to be able to borrow from your broker small amounts of money to be able to buy stock on margin. A margin is a loan, margin loan. A margin account with your broker gives you the right to borrow some money from them, but they own the collateral. They own your stocks. They have the stocks in your account that they use for collateral if you borrow money. So a short seller does the following. They borrow stocks from the broker and sell it with the thinking that the price is going to drop. In other words, let's say they bought Ford stock at $10. Sorry, let's say they borrowed 100 shares of Ford stock for $10 a share and sold it. They borrowed it from their broker. That's on a margin account. Their expectation is the only reason they would sell short is they think the price is going to go down. They think the price of Ford will drop to $8 or $7 or $5. And then they can buy it back at the lower price. If they sell it for $10 and buy it back for $5, they have a $5 profit per share. That's what short selling is. However, the risk for short sellers, if stocks unexpectedly start going up, short sellers have to buy stocks immediately or they can lose money. If someone bought Ford stock for $10 thinking it was going to go to $5, but it goes to $100, the short seller has to pay the broker $90 a share. The spread between what they sold it for, $10 and $100, that's $90. They can lose a lot of money. So part of the buying today, both on the NASDAQ and the Dow, was a short squeeze. It's called a short squeeze when insiders, like Wall Streeters and congressional insiders, can set people up to short stocks and then make an announcement about tariffs, which causes other people to start buying stocks, causing the price to rise. The short sellers must then buy all their stocks. So part of what happened today was a massive short squeeze. So, if this kind of volatility happens for one day, maybe it's random. But 5 freaking days in a row, it's not random. That's just our opinion. So we suspect insiders know about tariff decisions in advance, and they're making bank off this volatility. That's what we think is happening. It's just, if you've ever taken a class in statistics, you would know that statistically, with these kinds of extreme ranges in the stock market, you would know that it's highly unlikely that such extreme volatility would happen in a very short period of time with all these different tariff announcements going in all different directions. It's almost as if the people who are behind the scenes are manipulating the market to set people up to lose money, and they make money. And we think congressional insiders are part of that. We suspect people it doesn't matter what party they belong to. If they're in Congress, they legally have the right to trade stocks on insider information. So I want to say something about people who are invested in stocks like we are. If you have simply held on to your stocks and not done anything with them, all you've seen is your stock prices go up and down, up and down, up and down. They've been going up and down for like 10% or more for several days, just all over the map. But you're not hurt because you didn't sell. So if you didn't sell, you're in good shape, right? But if you need money out of the stock market, or if you're close to retirement, in our opinion, this is not advice, consult your financial advisor. In our opinion, it is better to look at a safer, less volatile investment like a long-term treasury bond, because with treasury bonds, you get your money back at the end of the period, the duration of the bond. If it's a 13-week, if it's a 6-month, if it's a 1-year, 2-year, 10-year, you get your money back. Or real estate-related investments. That could be actual rental property. It could be REITs, something that invests in stable real estate, not office buildings. Office is not a good investment, but instead of stocks. In other words, the stocks have been fluctuating by large swings over the past several days. If you need your money out of the market or you're close to retirement and you want to put new money to work, don't invest in stocks. So here are some ideas for stable stocks. And again, these are ideas only, not advice. Some stocks are more stable than others. Healthcare stocks, all humans need healthcare. It tends to be a pretty stable industry. And there are a lot of stocks in the healthcare industry that have been around for a long time. Johnson & Johnson, everyone's heard of Johnson & Johnson as an example. The utility stocks in the utilities industry, those are the energy stocks. We all need energy. They tend to be pretty stable stocks. And again, this is if you're not close to retirement and if you don't need money out. I'm just saying, if you want to put new money to work in the stock market, you could consider this healthcare, utilities, consumer staples. That would be companies selling highly bought consumer products, and Target, Walmart, Costco. Not tech stocks. I have a tech background. I'm not buying tech stocks right now. I like tech stocks. I've been buying tech stocks for a long time. I'm not freaking buying tech stocks right now. Not with this manipulation going on. I can't prove there's manipulation, but I know statistics, and statistically it's unlikely that all these tariff announcements that have made the market go in all different directions in such a short period of time and a consecutive number of days, it's just highly unlikely. It's random. I think there's manipulation going on behind the scenes. I don't know who's actually the source of it, but I do know that people in Congress can trade on insider information, and Wall Street people do trade on insider information. So I want to leave you with something I didn't have room for it on the board. if you're concerned about the volatility, there is a way to keep an eye on volatility in the stock market. And again, if you're close to retirement or you need money out of your stocks, I would not put new money to work in stocks right now. In fact, if you watch this video, The Horror, Financial Markets Today from 2 days ago, we explained if you're going to put new money to work, wait until every last tariff issue has been resolved for at least 1 month, including China. And China is going to take a while. It looks like they're playing, they're just not cooperating. So I would not put new money to work in stocks. But if you want to put new money in stocks and you want to get a sense of volatility, there's a volatility index called the VIX, V-I-X, Volatility Index. It's a way to track when the stock market is turbulent. When the VIX, you can look this up online, the Chicago Board of Option Exchange, the SIBO VIX index, if it's at 20, that's kind of borderline stable and turbulent. If the VIX goes up to 30, the stock market is turbulent. If the VIX is at 50, the stock market is very turbulent. So right now today, the VIX closed at 33, a little over 33 today. So right now the stock market is volatile. Do not put, this is just an idea, not advice. We're not putting any new money into stocks. Not with the VIX at 33. There's no way to tell what direction the market's going to go. And with this manipulation that we suspect is going on behind the scenes, you're better off just waiting until because once the tariff issues are all resolved, these insiders, if there are insiders manipulating things, they will no longer have a cover story to explain and a motive and a means to manipulate the market once the tariff issues are all resolved. So until then, again, if you want to watch this video from 2 days ago, The Horror, Financial Markets Today, you can watch that. We explain what to do with stocks in the current condition. But we're in bad shape right now with the markets. The markets are, we think they're being manipulated, and we can't prove it, but it's highly suspicious that so many days in a row, so much volatility, the swings are quite high. The timing of the tariff announcements, the nature of the tariff announcements, and it's just very suspicious. So if you have any questions about this, please post questions in the comments, and I'll try to answer those. And I really want to thank everyone for watching, and have a great day.